Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We've got an amazing guest for you today. He's a fintech innovator, an industry thought leader, an AI evangelist. Please help me welcome back to the show, Tim Nguyen, founder and CEO of BeSmartee. Tim, it's great to have you back.
Mike, it's good to be back. How are you, sir?
I love having you on. You always share such incredible insights and not just theory, but really where are some areas in lending that people can do something about right away. So I want to dive right in. There's all this talk, AI, there's talk about automation, and we'll get to that later. But one of the things that I don't think people are talking about, but that they're leaving money on the table is this industry silent leak, application abandonment. Talk to me about application abandonment and why is it such a problem for lenders today?
Yeah. So put simply, you got to think of, as a mortgage company, you got to really think about your funnel like a online e-commerce shop, right? People visit your website, they look around, they put items in the shopping cart, but if they don't follow through in that shopping cart, right, you don't have a sale. So what we found recently is lenders do not measure the application conversion rate. Okay. So meaning if you send 100 borrowers a URL or send them through some type of application process, right? I'm mainly speaking about online, digital, what we found is about 60 to 70% of those borrowers will actually finish using most point of sale tools.
Okay.
And if you think about it, that's a horrible conversion rate.
Correct.
That means, 40%, 30 to 40% of your borrowers never finish. So then that kicks off, right? It leads into a recapture, re-engagement funnel, if you have one, right? Which has to be managed. You have to put tools and staff behind it. It takes time for people to get borrowers re-engaged, right? So it's very costly because number one, you lose the direct conversion. Number two, it's costly because you're basically paying twice to get them engaged, right? So a good solid point of sale should convert about 80 to 85%. And what we found too is every 10% of conversion is worth about 14% of increased revenue.
Wow.
Top line revenue without any additional marketing costs, process costs, tooling, et cetera, right? Lead buy, all those things. So you're literally leaving money on the table, right? And if you think about the impact where we're heading into, people are pretty excited about the mortgage business again, right?
That's right.
But what do we all know? It's not going to last forever, right? When the times are good, it's great. When times are bad, it's really, really bad. So as time starts normalizing and we start having this momentum, what is your conversion like? Can you afford to leave 14% top line revenue gain off, lose it? I think most can't. We gotta, close these deals, maximize the profits, put that profits away because it will rain. Ironically, it should rain today in Southern California. But yeah, it will rain again. So you gotta be ready for it.
So let's talk a little bit and dive a little deeper on RCPA and tracking and what should lenders be tracking? How do they set that up so they stop leaving all of that money on the table?
Yeah, so first of all, just one metric. Just start with one simple metric. I'm not trying to metric at anyone to death. We all got enough metrics in our space, right? But track the application start to application submission ratio. Because if you don't have an application submission, you can't submit it to the pipeline.
Right.
Down in the pipeline, you can't process it, then you can't fund it, you can't close it, right? So it's an application start, application submission. That is the tip of the spear. The higher you get that, it cascades down to the rest.
And is this one of those areas where, hey, loan officers really don't like reporting on it? They don't think about it? Is it that lenders just don't have systems set up for it? What do you think causes kind of that bottleneck or that apprehension to actually track this?
It's a really good question. I don't know why people aren't speaking about this. It's so obvious. It could be that the POS platforms that people are using just don't convert well, so the vendor doesn't want to, shine a light on it. I have yet to see a competitor competing POS actually have a stat for this, like something you can run and analyze. So you're left pulling the data yourself and analyzing the data from the warehouse to figure it out. So it's kind of hard to get, I guess is what I'm getting at. Now, that said, I have seen some lenders track it, but the vast majority do not.
Right. Well, and I was talking to a group of companies last week, and one of them's like, well, that's not in our pipeline. Our pipeline yet, so let's not worry about it. I'm like, well, hold on. Like all of those potential opportunities that are sitting there, we can get into semantics, whether it's a lead, it's not a lead, whether it's pre-qualified, not pre-qualified. But to your point, if you're not tracking that fallout, you're leaving a ton of money on the table.
Yeah, it's kind of a tale of two cities if you think about it, right? If you are consumer direct, where corporate's spending, $500,000 on leads every month, they're probably worrying about it. And if they're not, they definitely should be.
That's
They're
right.
spending money on the lead buy. So what? It didn't get submitted to the pipeline. I spent $500,000 on leads. Like, we got to work these, right? We got to get them re-engaged. Now on the flip side, on the more traditional distributed retail side, you're right. It's more of this. Well, the loan officers is their job. They're independent. Whether they're independent or not, they're usually treated as independent, right?
Right.
They're out there to go hunt for themselves, and they hunt. They bring something submitted to the pipeline. Then the clock starts. The measurement starts. But even in those cases, if you can help these originators close an extra deal and a half every month, they're gonna be stoked. They're gonna be thrilled. Let alone you'll be happier. But that individual, that loan officer, that producer will make more money, be more successful, have more wins under their belt, have more confidence, and it just cascades.
So as lenders start tracking this and they take your advice and they start tracking it, what are the things they need to look out for? What are some benchmarks, some baselines that they should be looking for? And then more importantly, what can they do to turn the tide so that application does come in?
So it's funny. I've been talking about this a lot over the last 90 days or so. I've actually had a few people reach out to me, just people I didn't know. They're, hey, we started tracking this, and I'm seeing this number, and it's kind of low. So I actually hopped on, talked to some of these individuals, and it's sometimes there's nothing you can do about it. The online application, the funnel, the workflow, whatever you want to call it, the experience is designed a certain way, and there's very little deviation from it. All right, the vendor interpreted workflow and rules can apply a certain way, and naturally there's a lot of speed bumps, unnecessary speed bumps in my opinion in some cases, necessary speed bumps that were overdone, right? So in some cases it's a technology thing. Okay, so let's say you're stuck with a technology, you're on a 2-year contract, and like there's nothing you can do about it. Well, I would do something about it, because you don't, in the next 2 years, I don't know, the market's gonna be good after 2 years. So you got to clean house. You got to make this money, right? So I would do something about it. I would find a vendor that can do it and explain the situation. Some vendors might be willing to work with you to get a new deal, right? A new logo in the door, and like they might back off on price and help compensate for what you have to commit to on the other side of the house, right? Until that thing falls off. So talk to these vendors that have good conversion rates. You can also figure out how you lead into the application, setting the right expectations of what you can experience, and also setting the right expectations of what the outcome is going to be, right? The example I always use is like, you're online, you see this cool, pair of green shoes. Like, dude, I want those green shoes. That's pretty awesome. And you click on the ad, and it takes you a page where there's like green shoes, black shoes, red shoes, blue shoes, and there's like 100 different options. Like, wait, hold on. Right? Like, that's not how my brain worked. You had me at the green shoes. That's why I clicked on it. Show me that green shoe. And a lot of e-commerce websites make that mistake, and we make it in mortgage as well, where the messaging doesn't align and cascade through, right? And people get confused. Like, wait, well, am I really supposed to be here? Am I really going to get what I want? Does it seem like it? I'm going to stop, right? So the lead-in is really, really helpful as well.
You bring up so many good points, and I think for our audience who's listening, it's not just tracking, but then once you start tracking, you have to look at what is that flow of the application, and is it easy to use, and is it intuitive for the borrower? And if you're blaming your technology, maybe you have the wrong technology vendor that you're working with. So,
Yeah, so when you start getting this data, and you don't have to look at it every day. It's data you don't have now. Just look at it once a month. At least now you have some level of direction and awareness, right?
yep.
You know a problem actually exists. And if you deep dive on it, and this is going to be a lot harder to do on most systems, is where did they fall off, right? What page, what field? Because maybe you're asking the social security number question too early, or maybe there's not enough security verbiage around capturing personal information, right? So it could get really nuanced, but just start with a broad conversion. And if you can later, figure out generally where people are abandoning and focus on that one first. What's the biggest number? 40% abandoned here. Okay. This is where we start.
I love it. Great practical tips for those of you listening. Take Tim's advice. It will have an impact on your bottom line. And it's not monumental steps that you've got to take to make this happen. All right, we're talking mortgage. Let's go beyond mortgage and talk to me about some efficiency lessons from commercial lending.
So BeSmartee, as many people may not know, is also serves a commercial business lending space, specifically the C&I space, or commercial and industrial. So we have a very fast growing tool over there that is serves hundreds of logos in the commercial space. It's a backend tool, but basically what it does is it automates the extraction and analyzation of financial documents.
Okay.
Financial documents, bank statements, tax returns, all the basic minimum requirements needed to underwrite, process and close a commercial business loan. So this automation is in alignment with what we do at BeSmart, right? We want to try to automate everything we can without over automating. And what it really does at the end of the day is we're using old models and new AI models to take a 2-3 hour process and turn it into one that takes a couple minutes. That means that bankers can get back to their business entity borrowers faster, with better answers, more accurate answers, guide them through the process. One thing that we're launching at BeSmartee soon is a credit desk AI tool for commercial.
Okay.
And that's going to be really exciting for us. Think mortgage scenarios, but it also exists in commercial as well, lending, right? They just call it a credit desk. They use credit analysts instead of underwriters, right? So it's just different, generally the same thing. The challenge though is commercial even more nuanced and more bespoke than mortgage.
Okay.
And mortgage beyond the agency stuff, right? It's pretty bespoke.
Right.
Things are even more bespoke than the bespoke mortgage products.
Interesting. I love, you guys are always bringing innovation to the market. You're looking at solving real world problems, real solutions, and not just creating technology for technology's sake. Besides the AI for the commercial, what else is next for BeSmartee?
Yeah. By the way, I have to, because I can't in good faith sell something to somebody and it doesn't provide value. Number one, they're going to complain. Then we're going to get into a debate and might lead to an argument, and it's just time wasted from good time wasted on bad things, right? So we try to avoid that as much as we can. So what's new at BeSmartee? So next year is going to be a really fun year for us. We're, at least on our mortgage side, we're working on some pretty special things. I don't want to let the cat out of the bag yet.
Okay.
But obviously it'll revolve around AI. It will change the way that people think of point of sales. It'll also change the way people work their OS.
Interesting.
It will be, just think what we've been hearing in the AI world in general. We're going to try to make that happen, but specifically on mortgage.
I absolutely love it. And Tim, you are welcome back anytime, and especially when it gets closer and you're ready to talk a little bit more about that. I can't wait to hear about it. Our listeners can't wait to hear about it. Anyone who's tuning in for the first time, if they want to get a hold of you or anyone at BeSmartee, what's the best way they can do that?
Yeah, just go to BeSmartee.com. That's BeSmart.com. Just click on contact us, and that'll get a message out to us. If you want to talk to me specifically, just send me an email, Tim, T-I-M, at BeSmartee.com, and happy to help however I can.
Tim, I love it. And I can't wait to hear about some of the new things coming down the pike for 2026. But guys, don't wait. BeSmartee is doing a lot of incredible things right now. Make sure you start tracking that abandonment. If you're not happy with your workflow or you're seeing that that's some of the reasons why people are falling out, talk to Tim and his team. They'll help you out. They're doing some great things in the industry. Tim, thank you for being a guest on this episode of the Fintech Hunting Podcast.
Thanks, sir.
Take care.
Bye-bye.